The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 10th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with our empowering beliefs, my favorite, which are become your own electrician, the electrician of your beliefs. And the reason is because beliefs have got the incredible power to create or the power to destroy. And you and we are the only ones that have that awesome ability to take any experience in our lives and create a meaning that empowers us, one that literally can save our lives, or few will go ahead and use a meaning of disempowerment. Think about it like this, folks. There is only one thing that you and I can control, and that's the meaning that we give to something. That's the beauty of the markets we trade. We've got bulls, we've got bears, one that sees an event as a selling opportunity, one a buying opportunity. You see, it's your beliefs. It's the meanings that you give to events, to statements, to criticism, to candle signals, to patterns. You are the one in control of that meaning. Pretty cool when you think about it, because what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capability. It's more likely a function of our beliefs about who we are, and that matters because each of us are trying to break through. It doesn't matter what level you're at. If you're at a high level, you want more. If you're at the bottom, you want to get out of there. And all breakthroughs begin with a change in beliefs. And the easiest way, the most effective way to change your belief is to link your brain to associate massive pain with whatever old disempowering belief that you've got. Because at our deepest level, we must believe that this disempowering belief has cost us in our past, will continue to cost us in the present, and ultimately will only bring us pain in the future. That, folks, that is no way to live. That is what's called the Charles Dickens process. That means that knowing what you don't want is just as important as knowing what you do want. Why? Because we want to replace that disempowering belief. We want to get rid of it. We want to obliterate it. And we want to go ahead and then link and associate tremendous pleasure to the new idea of adopting a new belief system out there. And that's what we want to plug into that old void out there. And here's the key. At any moment, a decision that you or I make can change the course of our life forever. Could be the next person we stand behind in line, sit next to on an airplane, the next phone call we make. How about the next phone call we take? Could be the next book we read, the movie we see, the next page we turn. Could be the next newsletter you subscribe to. Any one of these things could be the single thing that causes the floodgates to open. And then all the things we've been waiting for will just simply fall into place. Hope everything is falling into place for you right now. If we take a look at what's falling out of place, it is the market here. We've got the Dow trading off 69 points. It's trading at 16,384. We've got the S&P down 4.5 points, trading at 1873 and change. NASDAQ Composite off 7, trading at 43.29. Russell 2000 down 4 points, trading at 11.99. NASDAQ 100 off a couple of points. New York Stock Exchange down 43 points out here. We've got net declining issues totaling 705. It's only 200 and change out there that are needed in order for the bears to truly take control of the New York Stock Exchange. Let's start out the day by taking a look at the NASDAQ Composite. Let's go through each of the indexes out here. If you're watching us on Tiger TV, you're taking a look at the Rhodes Momentum Indicator System and Signals out here. We've got the NASDAQ Composite trading out at 43.29.13. Still on a daily chart, though. Still in bullish mode. Still in nice bullish mode. If you're watching us on Tiger TV, you're going to see some, on the price areas, you're going to see some colored levels. You're going to see red. That tells you you're in a definite sell zone. You're going to see a dark blue. That is when it moves into a buy zone. Light blue tells you you are in a strong bull mode out there. Yellow just like the lights when you're driving out there, just says caution. Make sure you really take a look at your stops out there. Again, light blue telling you you're in that strong bullish trend. And on a daily chart, that's where we are at inside of the NASDAQ composite. Now, there are signals out there that have to say, hey, with regard to calling potential tops out here, there is a signal out there, and that was the bearish engulfing candle that took place on March the 6th. Now, not much of a candle session that it had to engulf because we had just a small spinning top type candle on March the 5th. But in addition to being a bearish engulfing candle, it was also a key reversal session. That means that we saw price intraday exceed the high and the low. That means that we saw price close in the opposite direction of the trend that it was in, and it means we were also in an extended condition. Now, if we see the NASDAQ composite get below the 4304-ish area, that will all of a sudden start to say, hey, we may really be seeing a change in trend out here inside of the market unfold. So the number, your trade rate out at 43.25. I closed today below 43.04. Let's just call it 43.03 out there, and the sphincter muscle of the bulls will start getting a bit tight out there. That is on the NASDAQ composite. Let's go see what's going on inside of the Dow Jones Industrials. Right now, we've got the Dow trading off 85 points, trading out at 16,367. Today's candle for the close like this would be a bearish engulfing candle out here. That is a potential reversal candle. The numbers you want to be paying attention to today, 16,277 or so. Again, you're trading at 16,367, so that would be another 90 points to the downside. You get below there, that spells trouble in paradise. Otherwise, on a daily chart out here, just some daily noise, and as it is also in the very strong bullish mode, the bullish camp out here, and that is on the Dow. Now, this system here that I'm sharing with you, that I'm showing you, this is not intended to buy a bottom or sell a top. This is about all getting that big, juicy hamburger out there and helping you to understand the trend inside of the marketplace. That is on the Dow. If we go take a look at the Dow Jones Transportation Index, let's go do that. Let's just go through these one at a time out here. Right now, the transports, let me see, where they're trading only down 3 points out here. So the transport's not exactly giving it up on price or anything. In fact, you got a little doji candle that has formed thus far. If we start to look for any kind of resistance, well, gosh, let me just pull this back here inside of the transports. It comes all the way back to the last high that was formed out here on January 23rd as it was forming a price relative strength divergent pattern that was confirmed with this big old bear sash candle, and that was on January 24th. So even though, this is interesting, even though the transports have not given it up, the high of that session on January 23rd, that's your resistance point. That's 75.91.43. You're at 75.89 right now. It'd be a doji. A doji at a resistance level tells you quite a bit out here. So the transports have, in essence, stopped. Even though they're not trading much lower today, they are telling you they are up against a resistance level. Let's take a look here at the NDX 100. Let's go see what's going on inside the NDX 100. It's trading off about 8 points, 9 points out at 36.94. It, too, just like the composite, had a bearish engulfing candle on March the 6th. That sets up resistance at its high being 37.38.32. Follow through on Friday. Numbers to be paying attention to here inside of the, I can't really stretch them, but looks like about 38.60. Looks like about 36.86 or so. You get a close below that, and that could start to begin to spell trouble. Let me get rid of this line. What's that line doing out there? That's an old line on my screen out there. That is on the NASDAQ. The NDX 100 out here. Let's take a look at the New York Stock Exchange and see what it is doing. It's trading off 54 points right now. It's down 0.5%. It's actually leading the charge to the downside. That is not what you want to see if you are a bull out here. There's that line again. Line in the sand. Now, if we take a look for reversal signals inside of the New York Stock Exchange, what we're going to see is that Friday's session, let's see, the high of Thursday out here was 10.548.12 versus the high of Friday, 10. 550. So what do we have on the New York Stock Exchange? We have a key reversal session out here. Key reversal session is a bearish signal. You're seeing follow through to the downside. What's the number? The magic number to be paying to today? Well, really the magic number is on the advanced decline, net advancing issues is really what I should say, how I should term it. If you were to see minus 273 or more, and right now we're at minus 809, that tells you inside the New York Stock Exchange the bears have the ball, and we'll see if they can do anything with it. Of course, they'll be advancing the ball downfield quite a bit today if you see it close below 10,404. I'll say not only do they have the ball, they've got the ball first and goal on the Bears' end zone, or the other team's end zone, the Bulls' end zone. How about that? So that's 10,404. But the real number is just simply anything more than 273 net declining issues inside the New York Stock Exchange. That is telling us that that's really double confirmation to the key reversal session that we had that occurred on Friday. If we take a look here at the Russell 2000. Let's go look at the Russell 2000. We know this thing had taken off to lunar space on March the 4th out here. Right now, until the Russell really gets below its breakout. Yeah, we're going to say 1186. The Russell gets close below 1186 out there. That's going to give you a trouble in paradise, and it is paradise inside of the Russell 2000, because we have the IWM and the Russell take out a swing point, forming a very large A to B equals CD to the upside, but that could be upset by a close below the 1186 type mark out there, and that is on the Russell. Let's go take a look at the SOX index, the Philadelphia Semiconductor Index sector out here. That is right now trading out at 573. No bearish reversal signals here. This has been nothing more than a huge sign of strength. This did, up until Thursday, had a price relative strength divergent pattern that was available to it, but the bears were never able to take control. We never saw a reversal signal. Therefore, the pattern was nothing more than just kind of like a little bit of a warning signal out there. You don't trade just warning signals. You want to have, at least I don't trade just warning signals. You want to go ahead and have some type of confirmation. So the SOX index, what you'd be looking for here, a close below about the 550, is it 565 level. That would start to spell trouble in its own paradise, and that is on the SOX index. Let's take a look here. And this is, again, we're looking at all daily charts out here. Let's go look at the S&P 500. Let's go see what it is doing. Trading down about $5 and change. Trading out at 1872.33 out here. Nice little doji candle that it formed. Also, now was not a key reversal session. It does not qualify as a key reversal session on Friday. Why? Because the open was 1883 and the close was the open was 1878.52, and the close was 1878. I take that back. I digress out here. We did have a close that was lower than the open, even though you can't really see it. So Friday's session was a doji candle. It was also a key reversal session. Any lower close today tells you the leaves are falling off the tree. It closed below 1657. That would be very bearish for the S&P 500. Right now, the Dow is off 78, S&P down 6. We'll be right back.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 80 points right now. S&P down 6.5. Let's take a look at the XAU out here. The XAU trading out right now at 100.23. We can see the XAU here is really, first it's traveling above the 200-day exponential moving average. That's about 97.81 at the moment. So that may be a level of support. We can see as it's been stretching up towards its highs out here. You got a little shooting star that took place. That was on February 24th. That's the high that we have most recently seen out there. That high is 104.34. We saw some additional follow through to the downside. Shooting star is the opposite of a hammer. It's taking place as the market is moving higher out there, so it's just as strong of a reversal signal. We saw follow through on the next session. You saw a little gap down, little falling window that took place on February 26th as well. As it made a bit of a retracement out here. And you can see this little dotted line going across my screen that held as support. We're now below that level right now. And as it made a recent high here on Thursday of last week, it was followed up on Friday with a bear sash. So this is consolidating at its highs, just like the gold contract. If we were to take a look at gold, in fact, we'll go ahead and put the gold contract, the continuous contract, on my screen here. We'll see that it, too, is consolidating at its highs. Now, in the case of Goldilocks out here, you can see as gold gold was making a slightly higher high back here in the trading session of Thursday on March the 6th, doing it with higher high with less relative strength out there. Never a good sign. The candle session that took place on Friday is really a dark cloud-ish cover. What that says, if you see it close, in this case here, first it closed below the open of the session from March 6th. That price level is 1337. That says, hey, be careful, beware out here. I would have to say it closed below the 200-day exponential moving average is where you should start to be careful out here. 1324.40 is the number on that. If we take a look at silver, see what silver is doing on its daily chart out here, that 200-day exponential moving average, that acting, as you can see, as a clear line of resistance out here. The top of the consolidation box where I expected to trade to about the $20.40 level before it really provides us with much information out here. Let's check out the ETF structures here. Let's start off by taking a look at the SPY, see what it is doing here as we speak right now. So the SPY is trading out at 187.68. It looks like the SPY here had a key reversal session as well. That was followed up after two doji candles. Again, doji candles, as Stevie looks at them, have a lot of meaning. When you get to resistance areas, of course, it becomes a problem when you are at all-time highs because there really is no resistance. When we talk about resistance, we're pretty much looking at the left-hand side of a chart. So in this case here, you'd have to look for other patterns to be completing up at that level. I do believe. Then we had two dojis in a row. Now, doji's telling you that the market is tired out here. And in this case, we had a key reversal session. That was your bearish signal on Friday, and that was a key reversal session. Now, the key level of support inside of the SPY here, again, it's a daily chart. Nothing is really falling apart. It's definitely got a shot across the bow. That shot will be maybe through the bow, though, if it gets down to close below 186. We'll call it 186 or so, maybe a little bit of change out there. But a close below that, and the shot will have missed the water on the other side of the bow and will have hit the bow out here. Bow, wow. That is on the SPY. Let's take a look at the Qs. The Q right now, it's trading out at $90.27. It doesn't have much longer to go before the shot does hit its bow out here. The Qs here having a key reversal session on Thursday on March the 6th, some follow through on Friday out here. So the Qs are very close, probably about the $90.10 mark or so, $90.15. Right now it's trading at $90.29. So let's say it closed below $90.10 would be start to tell you that there's some trouble inside of the Qs out here. Let's take a look at the diamonds, the DIA. Right now the Dow is off 85 points. The diamonds are trading out at 163.55 out here. No bearish signal other than coming back into resistance of the bearish engulfing candle from January 21st out here. The Dow, the diamonds start to fall apart when they trade or close, I should say, close below 162.60. So they have a ways to fall before they start to really fall out of grace out here. That is on the diamonds. Let's take a look at the Russell 2000, the IWM out here, see what it is doing. The IWM is now trading out 118.88 out here. Traveling, it should find some support really at that, maybe at the top of the session from March the 4th. That price level is about 117.26. The problem is once you get below and close below 117.78, the bears will really try to exert some force, and that is inside of the IWM, the Russell 2000. Boy, that was a big breakout session on March 5th. Right now, Dow's trading off 82 points, S&P down about 7. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow trading off 89 points right now. S&P is off 8. And the chart that I'm putting on my screen here right now, it's a 30-minute chart for the ES Mini. I use eSignal as my data provider, my data vendor. Haven't really used their charting system too much, although I'm trying to build a few tools for it. Now, the charting package, the charting system that I have on here is from the guys over at the TAS, the TAS Signal Box. And if you haven't had a chance, when you start your morning off, one of the things that you ought to do before, I think right about 8 o'clock, there's a video that covers that covers the TAS, the signal box out there. You can try that, at TFNN. Now, what I've got out here, I've got that application essence on the chart right here, and it shows that the if you're watching, not so much that you have to really be able to read the numbers here. Again, it's a 30-minute chart, and I can change this to different time frames out here. But the bottom or the support level of that signal box on a 30-minute time frame chart is 1870, and right now price is moving below that area. Now, this 30-minute bar is not going to end until 11 o'clock as we speak right now. But you can see price on the 30-minute chart is up against a fairly significant. Now, this is using a number of proprietary-based profiles out here, and so it's up against an area that should be pretty good support, which is right around this 1870 level. If it clears that area, so if we come into the 11 o'clock and it clears that area, you'll see a bunch of lines kind of going across my screen, colorful, rainbowish-looking lines out here. That's really nothing more than the congestion area. You know, like if you were to travel on the expressway, let's say you're driving down a highway and you come into a normal area that provides a lot of congestion. Well, you know that once in that congestion, you're going to be traveling at a slower rate of speed, right? Once you clear that congestion, what happens? You accelerate. So on a 30-minute chart, if it is able to close below the 1869-ish area, and the color of the candle signals on my box, it has nothing to do with the types of normal green and red signals that I use. These really are telling you green is nothing more than to an area where you should be long, and red is an area where you should be short. Now, it all depends on the type of time frame it is that you are trading on. Likewise, if I go ahead and change this, as you'll see here, to a daily chart, which I'll do. If we put a daily chart out here, the daily chart's going to show you that, you know, the support level on a daily time frame is right around the 1860 level out here. We're trading 1869, so another 9 points south of that. Boy, you get below that, and you will have seen these green signals, these green daily bars out here all of a sudden switch to red. So, anyways, just thought I would go ahead and share that with you at the moment, at least with regard to the S&P futures and where we are and where things are trading. And that was just take a look at a daily time frame as well as a 30-minute time frame out here. Let's take a look at some of the equities that are popping and dropping in the marketplace. Priceline. Let's go check out Priceline, see what it is doing. It's leading the charge, by the way, dollar-wise to the downside. So it's trading down $19 as we speak right now. Let's go see what kind of damage, if anything, is being done, what kind of volume we have inside of Priceline. Today so far, you've got volume of 154,000 shares. That's trading into the last sign of strength out here. That took place with a little bit of a gap up on March the 4th, 671,000 shares. So the swing point that it's trading into has 700,000 shares out here. Real support inside of Priceline. Right down here where we had wide price spread, accelerated volume. That took place between the trading sessions of February 20th and February 21st out here. So that says the high of 1286 should be a level of support for Priceline out there. Now, in the case of Priceline, let me get rid of this here. Let's say that, we had the markets over in Asia really kind of croak last night, right? Because you had, the Shanghai, what was that down about... let me see here. The Shanghai specifically was off 3%, down 61 points, 2.86%. The Hang Seng was off 1 3/4%. We're going to go check in on the Euro Japanese yen. But at this stage here, we had we haven't looked at the VIX, but it's trading above the 50-day exponential moving average. We know there's carnage done in the market when that happens. The New York Stock Exchange, you've got net declining issues now at 1,000. That's well above the level for where the bears need to totally take control of the markets there. Now, as we take a look here at Priceline, if Priceline were to gap down somehow tomorrow below 1324, you'd create a bit of an island out here at these all-time highs inside of Priceline. That would be something to behold and really to take a look at out here. I'm not saying that's what it's going to do, but in the case of Priceline, it is something we want to pay attention to, because I don't know whether Priceline will get below 1304 today. I'm going to assume that it won't. That's another $34 to the downside. I don't know why I would make that assumption. I'm just going to say, hey, maybe it does not do that. But if we start totally rolling out here and giving these signals and it carries through over into Asia, Priceline would have that opportunity to really gap down and form a very bearish pattern out here. So that is something that we will pay attention to. That's in Priceline. Also to the downside out here this morning, you've got Netflix. Let's go take a look at Netflix. NFLX is the ticker symbol, NFLX. That's trading down $11 here right now. Let's go see what kind of volume is behind its move. Now, Netflix could create one heck of an island reversal. I don't think that's going to happen because it would need to open below 370.56. Nonetheless, so far in Netflix today, 626,000 shares to the downside, trading into 3.7 million shares. Well, we've been trading for an hour. It's got more volume than that, and that is referring to the February 24th session out here. That says Netflix probably on its way down to the last sign of strength, which was January 23rd, somewhere in the 395. That would be the high you'd be looking at, and of course closing and getting inside the gap would send you down to about the 327 level. That is inside of Netflix out here. Also to the downside, you've got Tesla. So we got some of the big guys here now starting to give things up. TSLA is the ticker symbol. Tesla this morning down. Let's go check out the volume behind its move. Now, Tesla could easily form an island reversal here. Not today, but if we take a look at it, Tesla right now is down with 3.2 million shares, coming into its sign of strength out here with 32 million shares. So it's pulling back with lighter volume. The key, though, is for us to watch really where Tesla opens tomorrow, because if it were to open tomorrow somehow below 228.45, Tesla, well, I would say just short the heck out of it. Now, I would have to say, of course, you have to be careful. I don't know what the short interest is in Tesla, but if it were to form that island reversal up at those highs out here, that it just doesn't get more bearish than that type of a pattern. I am not saying that that is what's going to happen. I'm just saying that that is something for us to be paying attention to with regard to these high flyers out here. Let's go take a look at Google. Google is now down about $10, so a little less than 1%. Out here, let's go see what it is trading into. GOOG is the ticker symbol. It's trading out at 12.04. It's trading into its last swing point out here. That was the low for the candle session, I should say, from March the 3rd. 2 million shares down there. So far today, it's done 400,000 shares. So you got accelerating volume in the case of Google coming into a swing point here. Let's see where it's pulled us back a bit. Where does this have some additional support? Really not that much further below that its most recent swing point, and that would be the January 31st high at about 1186, about 6 million shares out there as a sign of strength. Let's see here. We've got, what else do I have? VIP Shop Holdings. Now, this was a pretty bullish stock chart, as I recall. Give me a moment here to pull this up. Let me see if I can first find it. VIPS is the ticker symbol. I think this thing had really shot up. Give me a moment here. Maybe it was an earnings. Well, I'm not going to continue to look for it. I'm just going to type it in, VIPS, and then we'll see what we have going on here. So it's down about $7 off about, well, that's weird, VIPS. Let me try to, there we go. Okay, yeah, I knew I wanted to be paying attention to this because this, too, could have a nice island reversal out here. So we got a lot of stocks that we're going to be paying attention to. Right now, today, it's pulling back. It's doing it on light volume, so for 500,000 shares, but volume schmolium. This thing forms an island reversal here, which means tomorrow it would open up below 153.16 and short away, fire away at it. Let's go out to Frank in Lexington, Kentucky. Frank, thanks for calling. Thanks for holding. How you doing this morning?
Steve? Oh, that's Lexington, Massachusetts, but that's okay.
Okay. Well, have you ever been to Lexington, Kentucky? That's the key.
No, not yet.
Okay. See, yet. So, okay. Well, the Al was anticipating that you're going to go to what you have. You didn't even know it. You've got a trip planned for you to go to Lexington, Kentucky. Maybe you're going to go to the Kentucky Derby or something. Have you ever been to? Have you ever been to the?
No, I haven't. There's a nice symphony orchestra there, though. Maybe I could go with Basil.
Okay, that sounds great. Hey, I'll join you guys for the trip. I like all kinds of music.
There you go. Hey,
all right, you want to take a look at the NASDAQ. Tell me what you're looking at, what question you've got, how I can help you.
I'm looking at today's volume so far, and I have 560 million, which projects for me to over 2.5 billion for the day.
Okay.
It's a pretty big down day and pretty big volume off the top here. What do you think?
Well, we'll take a look at the Qs out here. So if we take a look at the Qs, so you should take a look at it. Now, are you long? Are you short? Tell me what you're doing also.
Neither at the moment.
Okay.
I'm looking at it. Qs don't have quite as much volume.
Yeah. So you've got 7.5 million shares today in the first hour. So that just kind of mathematically calculates out to about 40 to 50 million or so, which is actually pretty big. Because remember, last Monday was the Putin scare, right? And we had the market trade down with 38 million shares. So you're trading into that, with volume here today. So you're coming into a swing point with volume inside of the Qs. Hasn't yet quite reached the top of it, which is 89.81. But yeah, you're having some volume off of the highs. Like the thing in the Qs here, most important thing in my opinion, is the mere fact that it made its high on March 6th, and it did with 24 million shares. Okay. And Frank, the Qs make highs with light volume, period. It's the most beautiful pattern out here. And the Qs also make lows with high volume. Something totally different, not in any book that I've ever seen out there. But if you take a look at each of the lows, each of the significant lows inside of the Qs, you'll see either on the day or within 48 hours of a high volume down day inside of the Qs out here, they actually make lows. So you're getting some sell signals. Now, would you normally take a short position? Tell me what you're thinking.
Sure. I could take a short. I actually took the DOG for a shot in the Dow this morning.
Okay.
And so, that doesn't look nearly as good as this, though.
Well, I will say that in the case of the NDX 100, so the NDX 100, one of the things that I follow, I take it from a trending standpoint. I take a look at the McClellan price oscillator and volume oscillator, and McClellan also has a calculation inside of the NDX 100. And so the NDX 100 actually slipped below the zero level on Friday. And so the NDX is the one that actually is first given its sell signal out here. If you utilize those trend-based.
That's what I've been talking about a little bit this morning. I've been on and off with you.
Yeah. So that if you're depending on if you're in the Dow, which is fine, to be a short. If these markets are going to turn, the question is who's going to lead on the way down.
Sure.
And what I can say is so far the first person to give us a signal, or first index to give us a signal, has been the NDX. We've got to see how the day plays out here. The way that it plays out, I say New York Stock Exchange gives us all the information that we need. If we get more than 273 net decline in issues right now, we're at 1178. That's a sell signal inside the wider swath of the market. The VIX index, as long as it stays above the 50-day exponential moving average, which it's well above it right now, that Frank is at 1471. It's at 1517. That's a sell signal out here. How long that sell signal lasts, I can't tell you.
Yeah. Let me ask you on the Qs. So you're saying on the Qs what's been happening is there's been low volume at the highs, and then it's turned down, and it's gotten high volume at the lows, and then it's turned back up.
That is correct.
So
it's a
mess. Yeah.
No. Actually, the Qs have had this behavior for a long time. You go back and you track it, and I can't tell you the reason why. I don't know. If it has something to do with the way that hedge funds are taking their positions. I just know that it's a pattern to be paying attention to. And if you go to any significant, whether it's a short term or longer term high out here, you're going to see that the Qs have this really nice benchmark of making highs with light volume out there. You put that together maybe with some other patterns that you trade, whether it's whatever that might be. You mentioned Basel, so if you Chapman wave, if you put that together with a D, E, or F or what have you, and you see a low volume high out there, it's a big signal to you.
Right.
All right.
Hey, thank you very much.
You bet. Thanks so much for calling. Thanks so much for listening. That was Frank in Lexington, Massachusetts. Right now, Dow's off 96, S&P down 9. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's 100, S&P is down 9. And, if you haven't had a chance to test drive the art of timing the trade charts out there, folks, now is the perfect time to be able to do that. You can test drive that. You can do it. It costs you $1. $1, Mortimer. So just go over to the homepage at TFNN.com. There's going to be a great workshop. It's going to be archived, so if you can't attend live, that's not a problem. That workshop is tomorrow evening. I believe it starts at 7 p.m., 6:30 or 7 o'clock tomorrow night. I don't have the exact time on that. My apologies, but I know that it is tomorrow, March 11th. It is a great tool. It is a great pack out there. I can tell you that David White develops great software. The very first package that he developed, I bought 2 copies. I had 1 copy for my computer at the office and 1 at the house out there. So, I would never ask you to do something that I wouldn't do, and that means go over, sign up for the Art of Timing the Trade Charts. Go check that out. Attend the workshop out there. A great, what it is, an incredible scanner for being able to identify Gartley and butterfly patterns. And if the A to B equals CD pattern is new to you, well, that's nice because he's already got built into it the tool that helps you to automatically calculate those price projections out there. And as you know, I've mentioned there's really 4 elements of any stock that you take a look at least in my opinion. There's 4 elements, and one of those is truly understanding the power of the move, what I call the energy or the angle, and that's where that power law vector indicator really comes in, because that is one of the better, I think that's one of the best indicators out there to help you understand, what I'll call, for lack of terminology, verticality. And it's got the volume built into it, right? So you need volume, you've got verticality, you've got volume, which is just supply and demand, and the other 2 elements really your volatility as well as your velocity, your momentum, your speed out there. So go check that out. That's on the homepage of TFNN.com. That's going to be a fabulous workshop. Both Tom and Dave will be there for that. Now, Frank from Lexington, Massachusetts, called about the NASDAQ composite. He was looking at volume. If I put up the A out here, the numbers to be paying attention to is really the bottom of this consolidation box. That's at about 36.39 at any point in time. 36.39 is 50 points below where it's at today. Don't suspect that we'll hit that, but I don't know. But look for that to become support. If that level gets broken, we will likely see it move down to about 35.44 out here. Frank had mentioned he was short the Dow. Well, if we take a look at the Dow 120-minute chart out here, we're going to see a beautiful rising price channel coming off of the lows back here in February of 2014 out here. That's right around February, the 5th out here. And you're going to see that price right now is broken through that rising price channel. So that looks very positive for the short position inside of the Dow. If we take a look at the Dow futures, the area that is held as support here most recently, we'll call it the low of 16,058. That is about 100 points due south of where we're at right now. So that's where I would expect the next level of support to be. That would be horizontal support. If we're just taking a look at retracements here, again, it's a 120-minute chart. What we're going to see is we're going to see that Steve didn't grab the right lines out here. Let's go do that here and actually get the swing points. There we go. Now we're talking. So you're going to see so far what the Dow has done. It's only made a 0.382 retracement dead cat bounce in getting down to the 16,336 level. You're trading at 16,340. But closing below that level with any kind of significance, that sets up a move to 16,230 out there. And again, you should find support, or it should find support right around the 16,058 range. So we've got things. We know what we're looking for, folks. We're watching for the VIX index. If it's above the 50-day at the end of the day, it says look out that you are into carnage mode out here, meaning where the damage is done inside of the market. The VIX 1471's number to be watching here at 1516. Folks, stay tuned. Basil Chapman is up next. Let's go ride the Chapman wave. Have a great Monday. Look forward to seeing you tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.